Welcome back. Looking at AbbVie. So this is a company that is a spin-off from another company. So it's got a relatively short history here. However, it is considered a dividend king because of the long dividend paying history and before the spin-off. Now, as we can see here, generally it's traded at this normal line of 12.8 times in a price to earnings ratio. It's currently roughly at about 11 times as a price to earnings ratio. Dividend yield 4.3 is not looking particularly strong anymore given the current financial conditions and monetary conditions in the USA and the relatively higher interest rates now that you can simply get with treasuries. But if we flick over and have a look at the long-term performance, what we can see is we saw early on some very strong dividend growth here of double digits, even 40% in 1 year in 2018. And that seems to be tailing off now as well to 10 and 8%. Now, one of the big drivers for the decrease in the dividend growth is simply down to the drugs and their drug pipeline. And we'll get to that in a minute. When we look at AbbVie versus the S&P 500, we begin to see that if we had invested 10 years ago on the inception of AbbVie, basically we would have had sort of 3 times as many dividends and substantially also more growth as well, meaning that the overall annualized rate of return without dividends is strong and with dividends is also quite strong as well. So it was a good performer since it's spun off. However, I think this is now beginning to change a little bit, and we're going to begin to look at what this means. Now, one thing I want to do is I want to have a quick look at the analyst scorecard for 2 reasons. Now, this is the analyst scorecard where they're trying to estimate the adjusted operating earnings. Now, you can see here 1 year forward with a 10% margin of error. They do a good job most of the time. They're on target. Sometimes the company beats those analyst estimates. 2 year forward, so the 20% margin of error, usually on target. Sometimes the company beats them again. Now, that's what I like to see. So the company's providing good guidance. They understand the industry, they understand the macroeconomic conditions, they understand wider industry trends, and they are providing really good guidance about this as well to the analysts. And the company's performing well, which is probably what we'd expect with a large cap value company like this. Now, this is earnings. If we switch to sales, not unsurprisingly, we see more or less the same type of outcome as well, which is very much, I think, expected. So when we begin to wrap this up, what are we looking at? Well, what we can see when we begin to look at the historical data is we can see this dip down here in 2022 to 2023, sideways movement here in 2024, and a little bit of an increase here in earnings in 2025. Now, this is largely driven by their largest drug, which is coming off patent, which means that they're losing that monopoly protection for the drug. Now, by itself, that doesn't mean too much, but it's the world's best selling drug, essentially, Humira. So, what does that mean for AbbVie? Well, they've also been, over this period, they've been developing a pipeline of other drugs as well, through mergers and acquisitions, through further trials, and they've been looking at, expanding the different sources of revenue that they can actually then profit from. Now, that, to some degree, is well, in my mind, that's really good management actions. They're looking forward to the future. They're looking at what they can do to overcome some of these problems that they know are going to hit them soon at a predefined date, and they're planning for this and they're taking appropriate actions. So I think fundamentally that's a really good set of actions that they've taken. And we can sort of see that it's not dropping off the earnings totally here. It's sort of dropping off a bit, and it's expected to make a recovery. So as we begin to look at what's been going on in recent years, we know that Humira is coming off patent, and we're beginning to see this decline here as well in earnings as a consequence of that. Now, this is being driven by a 25%, a 1/4 drop in sales of the Humira drug during this period, in the most recent period for sales. So that's quite a substantial drop, but this was well forecast, it was well understood, and so, we should and we did expect this. But if you pop the hood and see what else is going on, the Rinvoq and Skyriza are sort of the extensions of the Humira drug line. Now, the sales of these drugs are sort of growing at about 40 to 50% on a year-on-year basis. And as well as this, the actual sales are now reaching about, I think, $8 billion now of annual sales. So not only are they continuing to grow really well, they're also continuing to become quite large portions of AbbVie's overall drug portfolio. So I think that's what's arresting or slowing this decline here, slowing that decline in 2024, and then also beginning to create an uplift in earnings here into 2025. And I think it's really important to keep that on mind as well. Now, as well as that, there's a lot of other news for AbbVie as well about ongoing trials and approvals for some of their drugs also. But I think the key thing to remember here as well is this company is not going anywhere. They've got a really strong portfolio, and it's also important to see as we look here in the 2020 pandemic crash that the company didn't go down very much. Now, my experience, even say with the GFC, is that if you are in these pharmaceutical stocks, they do not tend to react as far to the downside as stocks in many other industries. So it's going to give you, I think, some protection if there is a wider market decline, and I think it's important to keep in mind. Now, what does this look like in terms of earnings and actual return potential? Well, I think if I click out here, for example, the fast graphs forecasting calculators suggesting total annualized rate of return of only 4%. So this isn't hitting my personal metrics out to 2025 at this price. I'm not saying this is a bad company. I'm just saying now at this price, with the expected decline in earnings now in 2023 and the relatively small increases for the following years, this is not a price I'm interested in buying at because of this very low rate of return. So I like the dividend yield. I like the way they've been growing the dividend. I like the S&P credit rating here of BBB+. This is all fantastic. I like the way in which the earnings estimates haven't been decreasing very much over the last 6 months from the analysts. So that's also really positive. I mean, it has decreased, but, not as much as some other companies. So there's a lot of positives here, but basically the price is not right for me. If the price was a lot lower, say down closer to $100, then I think there's definitely a case here for some really good, powerful outsized returns coming from AbbVie. But for me, right now, at this moment, I think I'm going to pass. Now, let me know in the comments down below what you think. Is this on your radar? Is this one that you're looking at to make a position in or start a position or grow your position in? Or is this a stock that you have been avoiding? Now, why is that? Let me know what you think down below.